Welcome back to another episode of Enjoy LGD. In today's video, we will be talking about how millionaires build wealth using life insurance. Be sure to hit that subscribe button, and leave a like and share with friends and family. Also follow me on Instagram at enjoy.lgd. Let's jump straight into the video. The number of rich people purchasing life insurance policies has been on a rise. Though they have enough assets to leave to their heirs, the affluent still find life insurance policy as a worthwhile venture for creating more wealth. In case you are wondering why nowadays the rich are using life insurance as a wealth creation tool, please watch to the end. When you think about life insurance, you typically think about using it to protect your family in case of your death. You might be wondering if you can really use life insurance to make you rich, and the answer is that it depends on how you use it and how it performs as an investment. Here's what you need to know about using life insurance to build your wealth. With that being said, here are 10 good reasons why the rich use life insurance to create wealth. Number 1. Principal protection guarantees your money. Your cash value isn't subject to market losses, as it is with mutual funds and other programs. When the stock market tanks again, and it's never a question of if but when, you won't lose a dime. Number 2. Guaranteed growth of your money every year. This will be interest rate driven based on the economy, but your account will move forward every year regardless of what the market does. This is compound tax-free growth and not the average rate of return you get with mutual funds. To be fair, in our current low interest rate environment, the growth rates are only in the 2% to 4% range, but as you study further you start to realize the real wealth is not in the growth rate even when rates go higher. Many financial advisors will tell you that your money would do better in a good mutual fund. But remember, when someone shows you an average rate of return, they can start taking that average from any time that benefits their example. This is not compounded growth but rather a factor of timing as to when you enter and exit the market. The stock market has wild swings. If that is acceptable to you, you should have much of your money in stocks. If not, maybe it's time to consider a different way to think about investing. Remember the period from March 2000 to October 2002, when the Nasdaq lost 78% of its value. It's been 16 years since the dot-com bubble started to pop, and the tech-heavy index still hasn't quite recovered to that level. If you like guarantees and stability, then you have no business putting most of your money in the stock market. Number 3. Dividends paid to policy owners are not taxable. Dividends aren't guaranteed, but many reputable life insurance companies have been in business for more than 100 years and they've paid out dividends every year. The amount of that dividend will depend on several factors, but it boils down to how much profit the insurance carrier made. When properly paid to the policy owner, those dividends are not taxable. Number 4. A high starting cash value amount, based on what you contribute to the policy. Whole life policies that aren't properly designed will have very little cash value in the early years. But a properly structured life insurance policy will have high cash value percentages, even in its first year, and they increase every year. This becomes an important fact when you realize that access to your cash will help you grow wealth systematically regardless of market conditions. Number 5. Access to your cash value at any age, at any time, for any reason without taxes or penalty. This is a huge benefit of whole life policies compared to 401ks and IRAs, which impose multiple obstacles if you want to access your cash before retirement, and penalize you if the funds you borrow from them are not paid back by a certain time and at a certain interest rate. No such obstacles exist with a whole life policy. So leave your cash in the policy if you wish, or borrow it back out and use it, the choice is yours. Number 6. The ability to use your account's cash value to recapture lost depreciation on major purchases and interest and fees paid to banks. If you learn to treat this pool of money inside the life policy like your own personal bank, you can loan it out to yourself and others to create wealth. More on this in future articles, but suffice it to say for now that banking has been around in some fashion for thousands of years. Any business model that lasts that long is worth understanding and using to your advantage. Number 7. Guaranteed insurance. Once the policy is in place, your insurance is guaranteed for the rest of your life. Many people assume they'll be able to buy new insurance at any point in their life. But nothing is further from the truth, especially for those who've been diagnosed with chronic or terminal diseases. If you become seriously ill, don't expect to be able to buy a new policy. This life insurance is all the assurance that you need to know that you're covered for life. With many whole life policies, you can add an accelerated death benefit rider for little to no cost, which will give you access to a large portion of your death benefit during your lifetime if you have a terminal or chronic illness. I just had a colleague with a client who was diagnosed with Lou Gehrig's disease, or ALS, and was sent a check from his insurer for more than 70% of the eventual death benefit. He'll be able to enjoy his remaining time without worrying about how he will pay his bills. Number 8. The ability to combine your life policy with the worlds of real estate, private lending, and auto financing to accelerate your wealth, both inside and outside of the policy. Just remember that any funds inside the policy are tax-free for life. Number 9. Protection from long-term care and chronic care expenses. Well-written policies with the proper companies could provide the ability to access a portion of your eventual death benefit during your lifetime to help pay for assisted living or long-term care expenses. This will insulate and protect your other wealth so you don't spend a lifetime building wealth only to give it all back before you pass away, leaving nothing for your family. Number 10. Death benefit. In addition to all the benefits you can make use of while you're still here, at heart, this investment is still a life insurance policy, so when you eventually die, there will be a sum of money left behind to your beneficiaries tax-free. There's a reason family dynasties, banks, and big corporations have been using universal life insurance for generations to grow and protect their wealth. Even when subject to estate limits, the wide coverage of life insurance makes sure that these death payouts go a long way toward promoting the tax-free, intergenerational transfer of wealth. Thanks for watching. Please subscribe, like and share. Also drop a comment down below letting us know what video you would like to see next.